So I've been trying to, times are stressful right now. They really are. We're working our asses off. So I'm trying to just stay calm and do different things. So I started doing yoga. And this morning I found something called restorative yoga,
Okay.
which you literally lay there and do nothing for 20 minutes. It might be my favorite thing to do right now.
You stretch at the same time, or you just sit
Barely. I mean, it's like nothing. You put some bolsters under your feet and you lay there like this. And I did yoga for 20 minutes and I take credit for it. So I think that's
Is it at a class or you just do it at the house?
I do it at the house.
Okay.
My Peloton app. But it's funny. But I feel accomplished today. So, hey, I want to open with a story. I talked to a friend of mine who's a client who happens to be the president of Newland Communities, which is a nationwide developer yesterday. And he's just a really cool guy. And when he and I talk, we get pretty deep. And, he's got his pulse on the country, not just Tampa Bay. And I asked him, what do you really think is going on? These prices are crazy. And is it sustainable? Are we heading to a bubble? What's your opinion as, the president of Newland Communities with a nationwide perspective? And he just went totally off on how bullish he is on Tampa Bay and how he doesn't see anything in the near future that's going to stop us. It's just, and then it came a story, and this is the story I want to tell. And this is an old childhood story. When you see through John Smith's eyes, then you see what John Smith buys. So I'm in the office yesterday, and Laura Wolf, who's on friggin' fire, tells me a story about a woman who just sold her house, an 84-year-old woman who just sold her house in New York. And her daughters live down here, so she moved down here. And she found a D.R. Horton home for $384,000 that she fell in love with. And she bought it for $384,000. So when you see through John Smith's eyes, then you see what John Smith buys. She sold her crappy old New York house for $5 something. Moved to Florida where there's 320 days of sunshine and brand new houses and luxury, new ovens, new stoves, new all that stuff. And it was, $115,000 less than what she sold. So when you see through her eyes, she got a friggin' deal.
Right.
But if you're excuse my French, if you're a tampon and you know that D.R. Horton house was $295 6 months ago, you think $385 is ridiculous. But when you see through John Smith's eyes, then you see what John Smith buys. So she sees a bargain down here at $385. We see excessive prices. And I just thought that was an interesting perspective for me to look at because, Boise, Idaho is more expensive than Tampa Bay.
Right.
And I would suspect that Boise, Idaho does not have as many amenities as Tampa Bay has. Yeah. Not that it's a bad place, but they don't have beaches. We got 4 of the top 10 beaches in the U.S. within an hour's drive of our market.
That's crazy.
I mean, it's just really amazing. I think I'd like to start my videos talking about how blessed we are with all the great things that are happening in the marketplace because we are. Yeah. But I want you to, I want our audience to realize when you see through John Smith's eyes, then you see what John Smith buys. So you don't know where they're coming from. You know what you know. My neighborhood is crazy. We just sold, Jeannie Gleason just put a listing up in my neighborhood that went for $670,000. That was a 450 house a year ago.
It was what?
A 450 house a year.
Oh, I thought you said 150.
No. 450, 500. It went for 670. Right? But the person that bought it for 670 thinks they got a deal. And she had 3 offers and the lowest one was full price cash.
We need to keep our appraisers up with this. The appraisers that are doing the appraisals. They're the ones that need to be trained on this reality.
Exactly. Anyway, I just wanted to open up with that story. I know you guys got a whole plan for us today, and I really appreciate your knowledge and wisdom.
Sure. I just got back from Montana with a couple of my buddies. We went snowmobiling backcountry in Yellowstone and Idaho and Jackson Hole and Big Sky, Montana. And one of my friends lives in Vail, and he's been there. I haven't seen him since college. It's been 30 years. And he's been there, and he's a builder, but he does pretty much spec homes for an investment group out of Mexico City. And he was just telling me, he says, listen, we're buying houses, let's say they're 2,000 square feet, 3,000 square feet for $1.5 million, adding another $1.5 million and selling them for $7 million.
Right.
They bought 2 lots in downtown Aspen, right in the middle of the city, for $12 million. Just a single story house. Lady'd lived there for 35 years, and she just sold her lot for $12 million. You know, I would have never guessed that 10 years ago.
No.
And it's happening in desirable areas. People are moving out of these really expensive houses, and they move from, you know, Los Angeles or San Francisco into Colorado, and they think that it's the best thing since sliced bread because there's no little state income tax, and the houses are deals, and it's happening everywhere.
Yep. And I think it's time for us to appreciate where we are, because we don't have a state income tax. So that 84-year-old woman just left New York. She has no state income tax anymore. She's living in a house that's nicer than one she had for $115,000 less than she was paying. And, you know, she can just do whatever she wants to do.
No shoveling snow.
No shoveling snow. So anyway, guys, take advantage. When you see through John Smith's eyes, then you see what John Smith buys. So we are tangled with our own vision of what we see, because we are myopic on what we see. But the people that are joining us from other places have a different perspective, and nobody's perspective is right or wrong. They're just different. So there we go. All right. So you guys have 2 topics for us today.
Yes. Craig, can I share my screen?
You may.
So let's go to share screen here. So 2 issues that have come up quite a bit that I wanted to inform people about that was going on, because as your agents are working with buyers and they're just starting that process, there's some things that have been hiccups lately that I think if they knew and posted and made people aware of these things, it's going to be very helpful. So one of the good things about these COVID rules is they've allowed the people to go into forbearance for mortgages, and they've allowed student loan payments. I believe interest payments are 0 on student loans, but many people have gone into the forbearance for the student loans. And I wanted to bring it to their attention that this can make a difference, make or break a deal.
Well, let me just dumb it down for some of the audience. Forbearance. We talk about it all the time in the mortgage world, but what does forbearance really mean?
It means you're deferring your payments or putting it on to the end. So they have 2 options. They're either going to be able to set aside, let's say, 6 payments and put together a payment plan of when to pay those back, or what was enacted in this last legislation this year, they're actually able to put it at the end of the loan, which is kind of a nice feature, because it used to be you had to re-record a mortgage to be able to allow somebody to put payments on the end of the loan. Because when you record it, it says, hey, this is your first payment, and the last payment is in 2045. So it allows you to put those payments at the end of the loan, thereby really giving somebody relief, because they could go 3 months, 4 months, even 6 months without making any payments. So that's what a forbearance is.
That makes sense. So it's nice. I mean,
it's
you're
a
still
nice
getting
feature.
money back.
It's a nice feature when you need it.
Right.
Because what's happened, and we'll go over the student loan one first, is they've allowed everybody who has a student loan, regardless of whether you have one student loan, it's $1,000, or we've had customers that have had $500,000 in student loans. They've allowed them to go into forbearance, no interest payments, no payments are due, but it's affected some people that had already set up really good payment plans. So if you owe, let's say, $150,000, historically, the way FHA, VA, and conventional lenders look at it, we count that as 1% of whatever the outstanding balance is $1,500 a month. Just like a car payment, just like another house payment, just like a credit card. So for people that have student loans, they went to college, they went to graduate school, and they've got, let's say over $50,000 worth of student loans, we have to count anywhere from $500 to $1,500 a month. I've had a few clients that had an excess of $300,000 in student loans lately.
Wow.
They're now doctors and they're doing well, but The only way to get them set up and to get into a home is to get them into what's called an income repayment plan. So we count 1% across the board. So if they've deferred their student loans, if on the credit report it says zero payment is due, we have to count 1%. And that's just the rule across the board. The only exception to that, Craig, is that if we're using a conventional loan and somebody has entered into what's called a income payment plan, where they send in their W-2s, their pay stubs to the student loan company, and they will set up a payment plan. And for many people, it can be just pennies on the dollar. It could be a small percentage of what the loans are due. But we've seen people that make $60,000 or $70,000, their student loans are only $150 a month or $200 a month instead of $600 a month. So once they have that put together and they've entered into that plan, we get to count the actual payment, even if the payment is zero, which is an outstanding thing. So if somebody had $200,000 worth of loans and they don't set an income payment plan, Greg, they're probably not going to own a home for about 20 years because they have so many student loans. If they enter into the income plan and the income plan says they pay $45 a month, we get to count $45 a month in their debt to income ratio. So a lot.
Andy, I've heard that student loans are probably one of the biggest challenges we've had in this country. It's a monumental problem.
Mm-hmm.
I don't know. I don't know the percentage. When you're doing loan applications, are you seeing 20%, 30%, 40%? How many people are having student loans?
And it's, let's say, the younger versions of people, but people, let's say, that are less than 45, it's probably 2 out of 5 clients have some sort of student loans.
That's 40%.
Yeah. And the numbers, Craig, are huge. And it's something that people should address, particularly agents should address, just as a kind of a public service announcement to their clients. You don't, and I hate to say this because I have a daughter that's at Ole Miss, but she just came home a couple of weeks ago. And to be able to go to an out-of-state school or some of these schools, that might be important in your junior or senior year, but nobody really ever asks where you went your freshman and sophomore year. If you can have your child stay at home and go to a community college, and then once they get to their junior and senior year, go off to school, you could cut their student loans in half.
Yeah.
And you're not going to handcuff them for the rest of their lives. And here's the problem that becomes an issue. With Dodd-Frank, you can't loan a student money if they can't pay it back. So guess who gets to co-sign with their kids? Parents. So if you co-sign for $100,000 worth of loan, it's as if you took it off yourself. So if you have clients and if kids are going off to college, they need to second guess the ability to finance and be looking into those issues, because they're going to defer the loans while their kids are in school. And now the parents have $100,000 or $150,000 worth of student loans that we have to count 1% into their deal. So it's a huge difference. You're
making it relevant to me to say we better get our clients pre-qualified before we show them houses.
Yes, absolutely. and sell HCC all day long. So that's kind of what we wanted to go over with student loans, because Craig, we've been seeing it. I see it all. Candace and I see it every day at this point. There's someone with a student loan that doesn't qualify. And our first step is, hey, before you go out showing a house, you need to contact your student loan company, get into this income payment repayment plan, because you actually have to start the plan. You can't just set up the paperwork. You have to be in the plan to be able to qualify. And that can take 4, 6, 8 weeks with some of these student loan companies. So great thing to address right now before this market gets too hot. And now all of a sudden you'd want to write an offer and it's going to take them 4 or 5 weeks to get their income payment plan set up with Sallie Mae or, some of these other student loan companies.
Wow. Good information.
So the second thing we wanted to go over is the other thing that's going on with self-employed borrowers, which is a huge situation that we come across as well. And let me share this one as well. Okay, so over I guess yesterday they considered the official 1 year rule on the COVID where it first started shutting things down. But where Fannie Mae has made it very helpful for people, and including FHA, is they were allowing customers to go into forbearance. Now that forbearance makes it so that they don't have to make their mortgage payments. We would only suggest that you do this if you absolutely need this, because what you're doing is you're temporarily ineligible for any type of financing on a mortgage while you're in forbearance. So the rule that Fannie Mae enacted, rule number one, if you go into forbearance, that's okay. The lender's not going to count it as a late payment as long as you were current on your mortgage before you went into forbearance. So if you were late, you can't go into forbearance. You might have to wait 3 years to get a mortgage. So you want to contact your mortgage company immediately if you have a hardship and start that process. But what Fannie Mae and FHA also said is, if you're going to buy a house, refinance a house, do a cash out improvement of your house, you must pull yourself out of forbearance in writing with the lender, and you have to make 3 payments consecutively before you're eligible. And that cannot be 3 payments in a row. So they will wait 90 days. You have to pay your April payment, your May payment, your June payment. You will be eligible to be underwritten in July. And we're going to verify all that. They're going to have to produce canceled checks, the agreement on the forbearance with the lender, and then they're going to have to show us that they're 3 months current before that happens. So that's come up quite a bit. Even people that didn't need the forbearance, sometimes they took it because it was offered to them by their mortgage company.
Oh, wow. I know a couple of people that have done that.
Not a good idea.
Yeah, and the benefit, I think a lot of these lenders, Craig, are putting that amount on the back of the loan, so it's never really going to impact them. Just important that they come out of forbearance and start making the payments again, and they'll be in good shape after 90 days. But one of the other things that they've been enacting is what they call auxiliary rules for Fannie Mae. So if you're self-employed, we have some other requirements. If your income dipped in 2020 because of COVID, we have to get statements from your accountant that showed when that was, what the period was, and we can adjust when we're averaging your income. So if your company had to shut down for 3 months, we're going to get something from your accountant to show, and they're going to basically say, yes, they were involved in COVID, and here's the difference in the sales, and this is when they closed the business, so that we don't have to average in that zero income couple of months. So that's a huge advantage. But where it's become a challenge is if you are self-employed today, like you, like me, we have to also show that in the last 15 days before closing and in the last 3 months that you've got income coming in sufficient to run your business with the average income you used to do. So if you used to make $100,000 a year or $8,000 a month in income, we're actually going to underwrite your last 3 months business bank statements to show that you had that kind of money coming in, and we're required to do it. We've never looked at business bank statements before, for the most part.
Wow.
So we've got to make sure they've got money coming in, and we're going to be evaluating that to make sure it is consistent with their average income. Part 2 of that rule now is that we have to show within the last 15 days prior to closing that they still have money coming in. So up until almost a couple days before closing, we're going to be asking for business bank accounts to show you have deposits, contracts coming in, money coming in. Now that one, we're not going to be doing balance sheets and that type of thing. We just want to see activity coming in. But it's very important, even for realtors, your clients that want to buy houses, they've got to have a closing between now and they're closing on their new house to show that money coming in. So it's really important that they keep money coming in. Even if they're invoicing, they should spread that invoicing out so that it still comes in every week and that we can see it. But that's how detailed it's become to underwrite a self-employed borrower right now.
Well, I've talked to a borrower the other day, and I asked him how it was, and he said it was the worst experience he's ever gone through trying to qualify for a loan.
Yep.
And that was a self-employed person. So, I mean, literally, I mean, we owe it to our customers to tell them, you know, just bend over and ask for lube because they're gonna probe you like it's nobody's business.
Yep.
So that's one thing. The second thing was, and it's just slipped my mind, but oh, this is it. You know, a lot of the conversations I'm having with just lay people, neighbors, is this is like 2005. This bubble's going to burst. And I keep telling, I said, no, this has nothing to do with that. 2005, we had artificial demand. 2021, we have legitimate demand. 2005, there were no stringent lending responsibilities.
Yeah.
2021, you've got to bear it all and qualify.
So
And
these are real buyers. Yeah, exactly.
These are real buyers and it's real demand. It's not and I make fun of the Home Depot employee making $10 an hour, flipping $400,000 houses. There's no $10 an hour Home Depot employee buying a $400,000 house today.
Right.
Unless he had won the lottery someplace else, but not on his income from his job. So that's a huge difference. And I want all of our agents, because if I'm having these conversations, they are too.
Right.
That's the difference.
Preparing them, like you're saying, Craig, is preparing them, because Andy and I talk to a lot of people when we're trying to qualify them, and some of the older ones will say, almost, it was last time I did this, it was like a handshake at the bank.
Right.
It's not like that. So the federal government is not handing it out like they did in 2007, which got us into this problem. So yeah, you're asking to borrow $500,000. Yes. We need to see
your ability to repay.
Greg, the other thing that I'd say that in addition to the people that are moving in town, you've got two other real groups out there that are the buyers that we see a lot of. They are people that might have been a little more conservative in their house buying prior to last year. So let's say they thought they only needed 1,700 square feet or 1,800 square feet. What this last year has taught us, if you have to work from home, if you have one of the parents that has to work from home and have a home office now, they need 2,500 square feet now because they have to have the area for the office. They've realized that when their kids are here at the house, they want more room. So you've got a lot of move up buyers that maybe probably underbought 5, 6, 7 years ago because they were being conservative. Now they realize they're spending a lot more time and working from home. They need more square footage. So those people are moving up, getting bigger houses, having home offices, and improving their houses as well.
Well, I've told this story 1,000 times, but so somebody just bought a friend of mine's house in my neighborhood for $1 million, and they were renters in DC, and they're tech people, and they got permanent work from home orders.
Mm-hmm.
And they said, in the winter, why the hell are we living in DC? And they moved down here and they bought a 3,500 square foot house on the water with a pool and a hot tub and a boat dock and all this stuff. And their mortgage payment is less than their rent was for their apartment in DC.
Right.
And there's no state income tax.
Right.
So, and that house, it went for $985, $986, something like that. It was an $850 house a year ago.
Mm-hmm.
It's just insane what the rest of the world is seeing, what we are living in. And that's my biggest aha, because when you talk to customers that are from out of the area, they can't believe the value they're getting here.
Mm-hmm.
Craig, do you guys communicate with any Century 21 offices that are in those areas like New York, DC, Virginia, some of these people that are fleeing from there? Do you guys have group chats and try to coordinate that and sending information? Or?
There's nothing formal, but I talk to a lot of broker friends around.
Mm-hmm.
And we talk about New York. We think of New York. We think of New York City.
Right.
New York City is devastated. Everybody's leaving.
Right.
But the suburbs of New York are booming.
Really?
Oh my God. Yeah. So it's not like they're leaving New York. They're leaving New York City.
Right.
But they're moving to the suburbs. And most every broker I talk to across this country is their markets are up.
Right.
Right. Mm-hmm. We are up. Our 2000 numbers were higher than our 2020 numbers were higher than our 2019 numbers, even with a 3-month decline of pandemic. And the rest of Century 21 is the same way. And the president flew in to vacation in Anna Maria last month or a month before. Jeff and I had lunch with them. Across the country, we are up.
That's awesome.
It's really, it's astonishing. But it's the major metropolitans. And the funny thing is, and this is probably a little political, but the conversations I'm having with a lot of people, one guy yesterday says, please leave your New York in Florida. Please don't bring your New York to Florida.
Exactly.
So these people are leaving these places that they've destroyed with their ideals,
Mhm.
and they're bringing those same ideals that destroyed where they were back down here.
Right.
So apparently Texas is having a lot of challenges with all the influx of people coming to Texas
Mhm.
that are saying, hey, we want it to be like California. Well, no, you left California because it's a screwed up country or state.
Right.
And now you're trying to make Texas like California. So they're going to have some gun law challenges going on in Texas soon.
Right.
So,
Hey, and Candace has met a really good pool company as well, Craig. So wanted to share that with you.
but that's an oxymoron.
Yeah.
A good pool company?
So they seem to have it on the ball, and pool companies historically take forever to do anything. These guys came out, they had their bid done in about 7 days. They had their paperwork ready to go. I believe they're already submitting for permits now, and their pricing was pretty good too. So she's going to share that with you because it's rare to find a good one.
Please do, because we are
Yeah.
having, well, I'll tell you, I'm involved with about 30 new home construction units in Mirror Bay.
Mhm.
And about 3 builders building these 30 homes. And it is the biggest cluster FU I've ever been involved with. I mean, a 2x4 piece of plywood, 2x4 plywood used to be $2.27.
Yep,
Now it's $6.
Right.
What are
Yeah.
trusses made out of?
right.
Wood.
2x4s. So you
Right.
tripled the price of trusses. DR Horton was our guest at our sales meeting this week, and they said, please don't ask us to give you a closing date. We don't know. And don't ask for a price. We don't know.
Right.
Right. I had lunch with a very successful home builder on Tuesday last week. I said, what are you doing? He says, I'm not selling any houses right now. I said, he said, I'm meeting with customers. We're planning, but I can't price anything because
Wow.
I can't build it.
Right.
Then I've got builders that are saying, I know I signed a contract to sell you this house for $750, but
Yeah.
I can't deliver it for less than $850.
Yeah.
So sue me or pay me
Right.
more. I mean, it is heartbreaking, some of the things we're dealing with. So when I was saying it's stressful,
Mhm.
Yeah.
it's stressful. I was talking to my agent yesterday. She got, 6 offers on a house and 5 people were really, really sad.
Mhm.
Right. And you feel bad because, we're good people in our souls. And it's sad. These people are really looking for a home.
Yeah.
And the crazy thing, and these things are working, and it sounds so corny, but writing a letter
Mhm.
explaining why your buyer likes this house so much makes a difference. I was talking, it was Nancy Conley in the office yesterday. She got a whole bunch of offers on a little condo of hers, and she asked the other agents who did not provide this information, tell me about your buyers. Are they second home buyers? Are they going to be living here? What's the deal? And then one agent just spit out all this heartbreaking stuff about this buyer, and the seller literally cried when they heard the story. And that's the offer they took.
Wow.
And it wasn't that it was $10,000 more or something. It was, they felt a connection to make their old home this person's new home. So it is just something we've never seen before. And you guys are really in the same industry we are.
Yeah.
We are tandem. And I don't know if you guys are doing this, but it's been a recommendation of mine to have the loan officer call the listing agent and say, hey, just so you know, Candace calls and says, hey, I have vetted John and Mary. I've seen their checking account. They've got plenty of cash. Their income is well over what's needed for this loan. They are basically through desktop underwriting. You have no financing problems with these people.
I have heard Andy make 3 of those calls in the past week.
And all 3 got the deals. So the other thing we did, Craig, is I asked permission of the buyer on 2 of them if I could disclose their credit score. So they both had over 800 credit scores. And I said, we're in a competitive bid situation. Would you guys mind if I disclose your credit score? And then there were 2 of them were salaried positions with lots of reserves. And can I disclose that? I have to have your permission to do it, but I want you to be able to tell your story and why you're such a good candidate. And then we did two other things. We had the buyer increase their earnest money deposit from 2 grand to 10 grand. And then we convinced them, hey, listen, we're not doing a 30-day close. We're doing a 25-day close because we already have all your docs. You're going to underwriting tomorrow if you have a contract ratified today. So we did a 25-day closing, and it was 3 for 3 all week on just doing those 3 things.
Well, that's my message. I'm telling an agent, tie in, qualify. You're in partnership with your
Right.
loan officer. It's a team effort now because it's hard. I mean, my daughter Samantha works for us. She processes the contract. I talked to her yesterday and she said, Dad, I did 30 contracts on Monday.
Wow.
I mean, processing 30 contracts is a lot.
All right.
And I said, Sam, do you realize that those agents probably wrote 90 contracts to get those 30 accepted?
Mhm.
You know,
With
and
all the, with such intensity in this market, I mean, if it hasn't been done before, I would feel as an agent, it's your own business. You need to have an attorney. You need to have a mortgage loan officer, a CPA, a financial, like a team that we are not just a transactional relationship. I've got realtors that I work with now that call me all the time with just questions. That's what I'm here for. You don't have to call me and give me a deal. You can call me and ask me anything you want, and you can use any mortgage officer you want. You know, it doesn't have to be me. But
strategize with me, right?
you know, I'd love to have the business, but if you have questions, Andy and I are here for any kind of conversation, and having, like Andy said, on the team, him making the calls, let us do some work for you. You're running around making bids and offers and stuff. Call and say, Candace, can you take this over? I mean, this person is good. Can you call them and see if you can help close this deal? That's what I'm here for.
Right. Well, let's get another mortgage misnomer out of the way. You guys are licensed in the state of Florida. So it doesn't matter. You don't have to just do loans in Tampa. You
Right.
can do loans in Orlando, Jacksonville, Daytona Beach. It doesn't matter. For you,
Right.
it's just processing and underwriting,
Right.
right? So where your butt sits has nothing to do with where you can do loans. 'Cause
Right.
we've got agents on from Miami to Orlando right now. And, you know, hell, those rocket lenders are out of California, for God's sakes, which is a
Right.
nightmare. They're 3 hours behind us, and it's horrible.
And you know what doesn't happen with Rocket and all of those, the big ones?
You don't have a
It,
dedicated LO to talk to.
well, they don't have one to talk to. And if somebody sends in their information and they're not qualified, they're like, bye, you don't work, bye. I've seen Andy do it all day. He's training me to do it, and I do it all day. Let's coach them. Let's set you up for buying a house in 6 months. We help you learn how to get out of the forbearance, what to do with the student loans, how to improve your credit score. We coach those clients, and we're getting ready to close one with somebody that we started working in November, that we had to clear up her taxes.
Mhm.
We don't go away. We don't say no and then you leave. You know, we're here to try and figure it out, and you don't get that from big box.
Right. Big boxes don't care. That's the problem, is they're an assembly line all about quantity, not quality.
And Craig, one other advantage too is because, one of the advantages I believe in being just a smaller local company is we're staffed for speed. And you've mentioned this many times. The faster we can get it closed, the higher the probability is we're going to get it closed. So last Monday, we did a contract last Monday, initiated the contract. Everybody signed it at 11 a.m. We had it in underwriting by 5 p.m. Title work ordered by 5 p.m. Appraisal ordered by 5 p.m. Submitted to underwriting on Friday. Loan commitment and the appraisal was back Friday.
Wow.
4
Wow.
business days.
Yep.
This particular one had a challenge with the appraisal, and they're negotiating a little lower sales price, just a straight purchase. We would be closing today, 10 days from the date we literally signed the contract, closing in 10 days. That's how good it is, because this is all we do. We don't have any other distractions. It's
But
just.
let me ask
being
you, did
done.
that buyer probably started working with you before the contract came in?
Yes. So
Right.
we are,
You got their W-2s, you got their tax returns, you had all that crap up front, which is what a buyer should be doing right now.
letters of explanation, divorce decrees, every document you could possibly imagine has already been at the office before we did the pre-approval. You're exactly right. So we're ready to submit when you write a contract.
All right, let's talk about this. This is a personal pet peeve of mine. Why is it, from a mortgage perspective, that everybody wants to close at the end of the month?
Oh, we just had this talk.
I mean, that's the worst service you're ever going to get from the lender, from the title company. Yeah, that in fact, I prefer to close in the middle of the month or in the beginning of the month. You'll get whatever you want. Everything happens quicker. Turnaround times to submit conditions. And that's why I like the 25-day close, because it's not, hey, we're going to close the end of April. No, we're going to close 25 days from today, whatever date that is.
But why is it that everybody tries to go for they're trying to save the interim interest?
So, Craig, there used to be a rule about FHA mortgages that if you closed on the 15th of the month, you still owed interest to the end of the month. FHA got rid of that rule about 7 or 8 years ago. So that's no longer the case on any mortgage. It used to be the sellers, they wanted to maximize and have the least amount of money into the transaction. So if they sold the 15th, they still paid interest through the 31st. And then they went and bought their new house. So now they're doubling up on their interest for that month. That rule no longer exists. So there shouldn't be any end of the month issue. And that's the same for refinance too. It doesn't matter if you refinance at the middle of the month or the end of the month, because there's no prepayment penalties anymore. They did away with all of those. So a lot of people, it's just old people got stuck in that habit, and that's what they do. And it's just, it's not a good plan, particularly if you could close and you still have your house rented or your apartment through March 31st and you close today. Don't you have 15 days to move?
Right.
Because you don't have to be right out of your house. Now you can do it at your leisure and plan out the move, and it's not as much of a hassle.
Okay, but still, somebody chatted in and said because renters, hold on, rentals end during that time and can get 2 months no payment. Okay, so if they close at the end of the month, they get to skip 2 payments. Is that a legitimate?
Only one payment. So they won't pay if you close the end of March, you don't have an April 1 payment. If you closed March 3rd, you wouldn't have a payment until May 1st as well. So yeah, actually closing in the beginning of the month gives you the more freedom to do that.
Right. Because I mean, I'll tell you, I'll make this number up. It's gonna be really close. I think we had 80 closings by the 3rd week of the month, and we had 155 in the last 5 days.
Wow.
Oh my goodness.
And that just stresses the hell out of my staff
Mhm.
and the title company and the lender and the appraiser and the surveyor and the.
Right.
It's just crazy. So I want the agents to speak up and say, no, look, but I think the only legitimate thing is interim interest. So if they close on the 15th, they've got to make a payment for those 15 days of that month,
At
right?
closing, correct. But it's the rates are so low that payment is negligible. So if your interest rate, let's say you have a $200,000 mortgage and your interest rate is 3% divided by 365, it's $16 a day, Craig. So
Right.
16 times 15 is a total of $246 to get the best service for everything.
Right.
The
Versus
closing time
waiting
you want.
at
Yeah.
Lennar's closing company till
At
2
9 o'clock at night on a Friday night on the 31st. So yes, $240, and you get an extra 15 days to move, by the way, too. So
Mhm.
it's just good business.
It is.
In fact, I'll tell you, with a customer, if they do it with us, we'll pay for it. I'll pay their interim interest. Take that out of the equation just to make it easy for them. And then they
And
enjoy
you.
it. Yeah, me too. I get better service in the middle of the month for sure.
Yeah.
No, things that drive a broker crazy.
Right.
What is better for the seller payment wise? If a seller closes on the 10th, do they owe another month payment?
They do not.
No.
They are paid out through the payoff of the mortgage, which generally is about 2 to 3 business days after closing. So yeah, they do not owe that. That's the rule that changed. It used to be on FHA payoffs, they would have to pay through the 31st. They just pay it off and they're done. That's just that much less interest.
That's what the estoppel is. They get a mortgage estoppel and say, hey, if we close this loan on the 10th, how much will we owe? And they tell the title company, you owe whatever it is. And they do it a couple of days for processing time for payments to come in.
Correct.
Yep. So you're really not doing a favor to your customer closing them at the end of the month if it's not necessary. Now, sometimes it's necessary.
But now it also might help you in a competitive bid situation if you can close by the 5th of the month and somebody else has suggested the 31st, because now the seller doesn't have to make an extra payment. He can actually not even make that payment on March 1st, let's say. And if we get them closed and paid off before the 15th, there's no late fees, and you save the seller one whole mortgage payment, which can be very nice. You can get a better deal.
So let me ask you this. So your mortgage payment is due, let's say, on the 5th, but there's a grace period for 15 days.
Correct.
Does it make any difference credit-wise if you make the payment on the 5th or if you make it on the 15 days?
Does not. There's just a lot of people have a 5% penalty of whatever that payment is it due on the 15th day. But if you pay it 14 days late every day, it doesn't ever affect your credit. You get 14 days of grace period. Correct. Yeah, there's no disadvantage to the customer.
Right. So I took a course actually, and I read a book, and I've taken quite a few courses on leveraging money, and making your payments early is kind of not sensible.
Right.
So I've been personally playing, I've got a pretty large line of credit on my home. So I've been using that to buy things. And then when I make extra money, I pay off my credit line. Right. So I'm basically using other people's money to invest, making returns, paying back myself. So I'm my own bank now.
Yep.
Right.
And so making my mortgage payment when it's due on the 1st makes no sense. So if I have a 15 grade payment, I set up on automatic payments anyway. So I just make it on the 13th to make sure I'm not late.
Yep.
Then I can use my money for 13 more days. And
That's what the bank does. It's called
Exactly.
the float.
It's called float. But these are the value statements that, there's a lot of talk about. I'm watching it. I'm watching it. My neighbors, they put their house on the market with a flat fee MLS company. They get on the MLS and then they sell. But what did they miss? They don't know.
Right.
We don't know. But I'm helping one of my sellers right now, and I walk the streets with my dog, and everybody's telling me, Bonnie's selling, Bonnie's selling, Bonnie's selling. Everybody knows Bonnie's selling. Well, Bonnie's listing with me, and Bonnie's got a strategy with me. And in the meantime, our home inspector's coming out, and our seawalls are being inspected, and the docks are being inspected, and we're making this house spit polished and shined, is being painted as we speak. And just the advice and the counseling that goes through that homeowner preparing the home for sale is the value that we're bringing. I guarantee you, I will get her $100,000 more than she would get on the open market with no representation. I have no doubt in my mind. And I'm going to charge her 6% for doing it. I mean, somebody else is going to do it for 3%, but I would rather have $100,000 more in my pocket than an extra 30 grand. Right. And that's the same relationship that a good loan officer has with the consumer, because you can counsel them into the right loan type,
Yeah.
Are you putting anybody in adjustable rate loans right now?
No. That's probably been 05 maybe. So, another advantages for us is that the way we're set up is I'm not a lender, I'm a broker. So I have 8 different lenders that we get to price every day. Now, some of that price also has to do with service. Like that, the one lender I take it to, they happen to be extremely competitive for price, but they'll get me approved in a loan commitment in 3 business days too. So if I need to close it quick, that's just as important as getting it done for the cheapest amount. So
3.1 or 3.2 really doesn't matter.
Yeah, and what I do is even if that costs me a little more as my business owner, I'll take it to that lender, even if I make less money, because the speed of that and being able to come to you, Craig, and say, hey, by the way, your contract was Monday, I have a loan commitment Friday, the appraisal's already in. Do you want to close 3 weeks early? You know, that's invaluable to do that. So we will even take a hit if we have to for the speed. I like to close loans quick, and you want to have that reputation. And then it gives you flexibility with your seller. You're doing a home inspection and you're trying to negotiate, hey, I want 10 grand off because this isn't right and this electrical needs to be done. But if you give me my 10 grand off, I'm going to close in 2 weeks instead of 30 days. Now you're talking. Now you can negotiate back and forth because that is a benefit to the seller. I can get you paid in 2 weeks if you accept this right now. So that's a strategy we've been doing, and it's been working quite a bit.
So ideally, how soon would you like to be communicating with the consumer? You want to be a week before they're shopping, 10 days, 3 days?
I want it as soon as you know them, because if we can prepare them, here's other certain things that happen, Craig. When you have an FHA buyer, and let's say they might have had some credit challenges in the past, everything is about risk. So there are 4 aspects. We've got credit, cash, credit, stability, income. Those are the 4, let's say, food groups of mortgages. If I'm a little light on my credit, I've had some credit challenges in the past, I'm high on a debt to income ratio, and I talked to that client today, their parents are going to give them 15 grand for their down payment. I'm going to have them put that 15 grand right now in a savings account with both of their names on it. Now, parents still control the savings account, but it's in both of their names. Now, when I plug it into Fannie Mae DU, that's 15 grand of their own money. They get to go higher debt to income ratios and buy a larger house. They get an approval where they wouldn't get an approval for a gift, because that is a big factor in approving somebody for a mortgage, is whether it's their money or a gift. It's like night and day. So I might be able to go to a 54 back ratio on a client and get them a $300,000 house if it's their 15 grand. If it's not their 15 grand, I might be 250. It's that different.
Yeah.
To have your own money into a transaction. So that's why I want to talk to them right away, because, hey, you're getting a gift from your parents. Great. Go do it today. So it's your money right now. As soon as it's in the account for 60 days, we can take a loan app and go. And now it's his money instead of a gift.
Okay. So one of the theories that I've come across is that, in a multiple offer situation, your VA buyer, your FHA buyer, they're pretty much the bottom of the totem pole when it comes to, because the cash buyer, the big down payment, heavy conventional. What can we do for an FHA VA buyer to make them a more viable candidate other than
on FHA? You're buying a $300,000 house. Your customer needs 3.5%, which is what, 11.5, 10.5?
10.5?
Yep. Have them put a $5,000 initial earnest money deposit and 5 more grand after the home inspection contingency. So now when you're looking at it, those first 3 lines on the contract are, we offered you 300,000, here's 5 grand as the initial and another 5 grand in 15 days. I think that people see those 2 numbers and they don't really care about the FHA as much, because they've seen some big numbers coming up from.
My entire down payment is on deposit now.
Yes. So am I the guy you want to work with? The other thing that I do, Craig, is that when we have somebody who's qualified, let's say they're qualified for 350 on an FHA, you're only writing a contract for 250. I try to convince the home buyer, I'm going to give you your approval for 350. And I know you're only buying 250, but no seller's ever going to give you a deal on a house because you qualify for less. But now the difference is when I show you an approval for 350 and there's 8 other approvals that say they're only approved for 250, which one are you going to take? You want to negotiate with a guy that's overqualified, don't you?
Yep.
So those are the 2 things I like to do on FHA and VA. And on a VA, usually the seller's not paying everything. They're not going to pay taxes, insurance, all that stuff. They might pay some closing costs. That can also be, again, a 5 grand. If they've got it, let's put a 5 grand earnest money deposit, even 10, and they can get it back at closing as long as we verified it. So those are all strong things that they can do.
It really is. I wrote an article on that this week about how it's unfair, really, for your low down payment buyers. They're getting screwed in this marketplace, and they want to buy.
Yeah.
So very, very interesting. You know, it's funny because you have to change with the times, because it was always, well, I know I'm approved for 350, but if I tell the seller I'm approved for 350, they're going to want more than my offer.
Mhm.
But now you're offering full price anyway. So you
Right.
just want to look like the best buyer. So it's just different strokes for different folks at different times.
Mhm.
So that's a good point.
I've actually talked to asset managers, Craig, on a lot of these renovation loans that we're doing with bank for, like a Fannie Mae asset manager, or let's say it's Wells Fargo and they're selling off a property that they own. I've asked the asset manager whenever I've gotten them on the phone, do you give a better deal to somebody who's more qualified? And the answer is always yes.
Mhm.
And they say, listen, you've got somebody who has money or they're overqualified for the house. I'd rather negotiate them than the person that's really tight, that gives me the approval that's just under what we asked for. I'd rather have that guy who's approved for an extra 100 grand because I just wanted to close. I don't want to do this twice.
Right.
And that's the way that they feel. So I've never seen an asset manager that didn't agree with that statement.
Look at this. I had an FHA buyer and she was putting $15,000 in escrow, a 5-day inspection period, and we couldn't get a contract. We had to switch to conventional to get a contract. And I wrote 25 offers to get her a house. That's just tough. And then Joe wrote, if a client has a loan on forbearance for a year already, can the loan payments go to the end of the loan and start making his payments?
They'll check with their lender on that, but that agreement usually, it's either going to put it on the end of the loan. We saw 2 last month where they set up a separate account and they called it, it was an advance. So it's listed on their mortgage statement as an advance to the consumer. My guess is that the agreement in the legislation is that they don't have to make that payment. The COVID legislation allowed them to do that. And it's a separate loan that just gets paid off whenever they close or refinance. Because when we do a payoff, it actually will show up. We'll see the total, the ones that they deferred, and then the original principal balance.
Wow.
Great question.
Well, I thank you guys for your time and attention. It really is important to stay relevant because things change and we get set in our ways and we do things the way we do them. But it's a smart agents that adapt, right?
Yeah.
And
And these are things we just saw come in. That's why Candace suggested it. Is these
Yeah.
are things we just dealt with in the last 2 weeks.
Yeah.
She said, Craig, we should tell them that.
Forbearance is
yeah.
a real issue.
Yeah.
I'm thinking of an agent friend of mine who, very proudly took the forbearance, did it, and lived with no mortgage payment for 6 months. It was great.
For sure.
But every action has a reaction,
Mhm.
and you just made us be aware of that.
Yeah.
So the one client we had that just closes today, Craig, and it's actually a refi. It wasn't a purchase, but they were doing a room addition. And US Bank, they did their forbearance with them. They've been trying to get out of forbearance since September. It took US Bank 4 months of collecting payments, not applying them, whatever. It took until January 27th from September 1st to get US Bank to acknowledge it in writing. So it took another 4 months, even though they were making the payments already. So he ended up making 6 months of payments till we
Wow.
closed. So because they're dealing with COVID. US Bank has employees that are working from home. So that's why it's just so important to start that from day one.
Yeah.
Yes, it is. So I'd like to end on the concept that I started with, because I think it is another paradigm shift for us. We're in Tampa and we're seeing the prices go and we can't understand why they're so high, because this is abnormal to see 10, 12% appreciation in a year. Right. And we're scared because of the past, where 2005, 6, 7, we saw prices go like this too. And then we felt a crash like none other. And it was an absolute brutal destruction crash. But this is not the same as that. And there's so many differences that we've already talked about. So the saying is, and I'd like you to communicate this to everybody online, when you see through John Smith's eyes, then you see what John Smith buys. So Laura's story, the 84-year-old woman who sold her house for 500 grand in New York, bought a brand new home in Florida for 385. That was a bargain for her. Right.
Right.
And the neighbor down the street that bought the same house 6 months ago for 295 said, man, she overpaid. No, she looked at it from a different perspective. And we're seeing the same thing. I was in Laguna Beach, California, a couple years ago, and I stayed at the Montage, which is a beautiful resort. I mean, and they had the Estates at Montage, was a residential housing community adjacent to. And I generally go for a walk every morning, so I cruise the Estates of Montage. And this is, on Pacific Coast Highway overlooking the ocean. A modest, really modest 3,500 square foot, 1-story, because you can't have 2-story homes because they block the view from the house above you on the hill.
Right.
$30 million.
Wow.
That was not a one-off. The entire coastline, it was 30 million on the coast. And on the other side of PCH, on the hills, it was 20 million and then 10 million. And these are miles of homes that are 10, 20, 30 million dollars.
Wow.
It's just generational wealth. And when you come from that perspective and you look at what you get on the Gulf of Mexico and Madeira Beach for $4 million, it's a joke. So we got to just open up our own eyes and look at it from other people's perspectives. Talk to your customers that are moving here from Boise, Idaho, and find out that their houses are $400 a foot and they're on 50-foot lots and they're 30 years old. It's a different world. So let's let our judgment pass and start looking through other people's eyes, and you'll see we really are blessed. So
Yep.
I thank you for your partnership and your guidance. We appreciate it.
Thank you,
So when you
Craig.
get more information, bring us back.
Okay.
Thank you.
All right.
Bye. Bye, everybody. Have a great weekend.
Thanks, everybody. Happy Friday.
Okay.